Hello and welcome back to Katie's Business Tips. Michael Lapide here in a short video going to talk to you about your GST or HST obligations as a small business owner. We've talked a bit about this in prior videos, but we're just going to go through the basic obligations. First of all, dealing with the obligation of GST, HST as a small business owner is a surprise to many new business owners. Like, how does this work? I don't understand it. It's all new to me. Now, if you've been in business for a while or you've been in business before, then you probably understand it. Many small business owners spend money that is not actually theirs. So what happens is you collect the GST, HST, and it just goes into the cash flow. And then you go, oh, I owe GST now. That happens with new business owners probably 70 to 80% of the time, believe it or not. Knowing and understanding your GST, HST obligations is a must if you want to avoid penalties, improve your cash flow, be compliant, and have less CRA issues, which we all want. In today's video, we'll look into what every small business owner needs. So for review, first of all, GST stands for goods and service tax, while HST stands for harmonized sales tax. And really depends on where you operate, because certain provinces have harmonized their provincial sales tax with the GST and they call it HST. Whereas other provinces, it's two separate things. Sales tax, PST, or whatever your sales tax is, and GST are two separate things. So depending on the province, every province is different, whether they have GST or HST, but the CRA treats GST and HST all as one account. So it doesn't matter what province you're going in, or if you're operating in multiple provinces, it's all one return, and it's all computed together. It's just different rates of collection, right? So remember, when you collect from your clients, that the money is not yours. So that is considered a trust account. When you're collecting that money, you're collecting in trust for the government. It's not your money, and you could be liable if you don't pay it. Even the director can be liable if you don't pay your GST. Same as payroll. You're simply collecting for the government until it's time to remit. So that's what's happening. You're being a collection agent for the government. This is the way the system works. I don't like it either. I don't like most of the things the government's put in place, but it's the way it works, so we follow the guideline, right? But you're the collection agent for the government, and you're collecting GST, and you're just holding on to it to remit it later, right? Now, how do we know when to register for GST? Well, it's mandatory when your sales are over 30,000 in a year. Okay, so over 30,000 of sales in a year, you have to register. Below that, it's optional. But if you do think that you're going to have a lot of GST on expenses, because you do get to write off the GST on your expenses if you're collecting GST and have a GST number, then maybe you want to register GST right from the beginning, as in most cases. Right? Voluntary registration will allow you to claim those ITCs that I was talking about. They're called input tax credits. So when you pay GST on something, that's how you collect it. You get to write that off, should I say, sorry. And that's beneficial a lot of times at the beginning of a business. If you're putting out a lot of expenditures for your startup, you want to get those ITC credits. You might even have a refund if you don't have any sales and you're just starting the business and you're putting all these expenses out, you're going to get that money back, right? Once you have registered, you need to charge and collect the appropriate rate, though. Once you register, you must collect it. If not, it's coming out of your sales. So if your sales $1,000 and you don't collect the $50 in GST, well, now it's $1,000 minus the GST, so probably about $955 in income and $45 in GST. So then you just took out of your sale to give to the government. So that's why it's always important to collect GST on top of the sale. Okay. Make sure you clearly show how your invoices track collections and separate tax. So you have to track it and make sure you can show it as well in case of an audit. And remember, it's not your revenue, so clearly separate it in your books. One of the benefits of being registered is that you can claim the ITCs. We already said that. So make sure that you avoid some key mistakes. First of all, mixing your GST with operating cash is a big mistake. Spending tax money is a huge problem. Poor tracking or record keeping, missing receipts, and you get audited and you don't have the receipts to back up your claim, that's a problem. Charging incorrect rates could cause you other problems, especially depending on provinces. You got to make sure you know. And missing filing deadlines, like there's penalties and interest, and they can really come after you for not filing on time, especially the longer you get, the worse it gets. They can even do what's called an arbitrary notional assessment. In this arbitrary assessment, they pick a number that you owe and they say, well, unless you file, you have to pay that. And it's usually a higher number than you would owe, most cases. So GST is very simple. It's calculated, or HST. How much did I collect? How much did I pay out in ITCs? And the difference is what I get back or owe to the government. Very simple. Small business owners, especially those that are starting, GST can be a bit intimidating. So always make sure you have some understanding, get help, get support. But once you understand the basics, like I said, if you've been in business for a while, GST just becomes natural. And don't forget, speak to your accountant. We as accountants are here to help you with these things. Thanks again for being a part of our business tips. And if you have any questions, we'd love to hear from you. Thanks again. We'll see you in the next video.